We have record-shattering price cuts at the same time as new all-time record home prices. Well, all-time high because they revised it down from 2022, remember, which, by the way, does anyone know? Anyone know how much prices are up from the revised record? I mean, how many times do we hear clowns say prices are only skyrocketing? But when we actually look at the data, how much have values of houses really gone up? Now, according to Redfin, when we look at the all-time record high, when we look at the peak, which was May of 2022, which was 432,449, okay, we're up. So from peak to peak, we're up $6,000 in 2 years. However, guys, remember, always remember, it takes, sadly, on average, 8%, which is $32,000 to cover just your moving costs in most situations. And here's the thing, you guys, not only all-time high payments, property taxes skyrocketing, insurance absolutely skyrocketing, but it makes sense that there's a buyer's remorse of around 90%, which is absolutely mind-blowing. Most new home buyers are trapped upside down in their houses. So again, I'm going to ask you guys, if you're on the sideline, if you have anxiety, what's the rush? Do you guys want to join the buyer's remorse club? Do you really? Now, personally, I get it. I understand the frustration, I understand the uncertainty, but regardless, guys, I'm tired. I'm sick and tired of the foolish optimism about how now is a great time to buy. You just got to be able to afford it. The pros are just cheerleading. You guys, they say the same things no matter the conditions of the market. Now, another issue is citizen consumers are using backwards looking, lagging data. And remember, you guys, even though I preach about MLS, not everything is listed on MLS. And so what I would like people to do, okay, what I'd like to see, again, I want to see you guys grow just like me. I want to see people studying Subdivision or the neighborhood that they want to purchase and the comparables, and basically just really see what's going on in their markets. Are there homes that are vacant? Are there homes that are being delisted and they're being brought back on the market? And then let me ask you, how many homes in your market are owned by Opendoor? Either way, you guys, no matter what, we need to be able to grow this community together. And as a community, we need to get stronger. Now, things are super confusing. We have super divided markets. Goals are extremely different. So again, guys, please share your knowledge, share your experience, and comment below and try to help some people out. But regardless, I hope you enjoy Redfin's macro, okay? Remember, guys, macro weekly housing market update. And welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. And now the data is in. And the name of this week's Redfin article is U.S. home prices hit new all-time high. No surprise there, right? When they revise it downward. Remember, none of these headlines would be true unless they revised the May peak down from around close to 500,000. Now this goes on, pushing pending sales down 5%. Demand continues to take massive hits. You guys will see that in the data. Demand is an absolute dumpster fire. So patience, again, patience is a good thing. Slowly things are coming around. If you already own a house, that's fine. Just buckle down, right? Buckle down and don't freak out. Now, thank goodness they kept it very brief for us this week. It is 4th of July. I'm recording this on the 4th of July. This state's pending sales posted their biggest decline since February during the 4 weeks ending June 30th. Again, you guys, demand further in the gutter. I mean, it's in the data. It's clear. They can't hide the fact that sales are back in the 70s and 80s. I mean, it's in the absolute gutter. The good news for prospective buyers, there are more new listings to choose from, and monthly housing payments are down nearly $100 from April. Well, unfortunately, they're up $1,100 from 3 years ago. So $100, doesn't really make a big difference. Would you guys agree? $100 doesn't really mean a lot. That's how much property taxes are going up a month in Texas. Our homeowners insurance is going up per month in Florida. So not really helpful. This goes on. We're taking a break from analysis this week. Please see the bullet points. So again, 4th of July. Let's see the leading indicators. Now, starting with the interest rates, good news is they're remaining elevated. We want this. We need demand to stop. We don't want people to go into foreclosure. We don't want people to ruin their lives. We don't want people to drive up the prices of houses. We just want things to get back to balance. And also, no more deficit spending and things like that. But regardless, they're elevated. They're in the 7%, daily average sitting at 7.13. Last year, we were at 7.03. So we're having the tightness, close to the tightness of last year, which is good because we're getting through spring and summer. Now, weekly average is a little lower as usual at 6.86%, and that's up from 6.71 year over year. Now, when we go into actual demand, you guys, again, we're going to look at actual applications. Now, applications doesn't mean a sale, doesn't mean a closed transaction, but that's down 12%. So you can't say the housing market's resilient. You can't say, if you're a professional, that it's a great time to buy, that things are great, because they're not. And you can't trick people because people get it because they're not buying. People are literally not buying. It's unbelievable how low sales are. And when you compare it to the 70s or even the 90s, remember, population is a lot higher now. So it's even worse than the 70s and the 90s. But look at, guys, Redfin home buying demand, again, down 17% year over year. Google searches for homes for sale also down 20% year over year. More indicators that demand and unaffordability is wrecking the citizen consumer. All right, take a look at this week's winners and this week's losers. Now, starting with Anaheim, number one, sitting at 14.7% year over year growth. I would encourage you, again, if you live in Anaheim, don't go off of this macro data. You still got to do subdivision analysis. I know that the new building that's going on there, it's expensive. They're doing price cuts, they're doing incentives, but you got to go micro. Either way, Anaheim, shockingly expensive. It's right next to John Wayne Airport. Now, number two is Norwalk, New Jersey, 13.5%. Number three, Nashua County, New York, up 12.6% year over year. Number four, New Brunswick, New Jersey, 11.7%. So a lot of East Coast, West Coast. And then number five, actually, Fort Lauderdale, up 11.1% year over year. Now, what's also interesting is look at the decline. Okay, so look at the loser column. All three of these metros are in Texas, and I just did a video. All three of these metros listed here have massive skyrocketing inventory growth. I'm telling you that because inventory is important. You hear a lot of bullish perspective that's flip-flopping on how important inventory is. But again, I'm telling you guys that inventory is important, and these three metros are being fed. The inventory growth is being fed by new construction. Also, job market in Austin, horrible. Austin's leading the way, down year over year, 2.1%. Number two, Dallas, down 1.5%. Funny we don't see Fort Worth in here. Number three is San Antonio, down 0.2% year over year. And you guys remember, that is not from peak. From peak, those metros are down way more than 1, 2, 3%. We get a lot of comments like, oh, it's just down 1 or 2%. Well, yeah, year over year. Austin's down year over year over year over year. Austin's down over $100,000 from peak. So if you're looking at the small picture, you're going to think small. If you want to think big, you got to look at the big picture. But I see it all the time in the comment section. I just wanted to come in here and say, remember, look at the big picture, please. And don't forget, the big picture is really the small picture, hyper local. You guys hear it all the time. Should be no surprise. Location, location, location. But you got to do the subdivision analysis review. If you've recently purchased, if you have buyer's regret and you didn't do these things that I'm saying, who do you have to blame? Unfortunately, you kind of got yourself to blame. So again, guys, just don't be one of those buyers. Now, let's start visualizing some of the data. Okay, here we go with median sales price, which again is not how value is calculated. You want to know how value is calculated from the appraiser aspect. 3 comps, 3 sold homes in a subdivision. Again, not all homes are in subdivisions. Most homes are in subdivisions. 3 sold homes. That's it. So you got to, again, you got to get local. You really don't know what's going on in your market with where you even want to buy unless you're hyper super local. Now, regardless, you guys, I still think we're going to end the year with nominal decline, not just real decline, but nominal decline. Because again, remember, in 2022, we were way down here. But the peak in 2022 got to here. Remember that, guys? So we're not even at the trajectory of 2022, and yet, days on market has exploded, price cuts has exploded, inventory has exploded ahead of 2022. So, again, it's scary because it looks like it's skyrocketing, but don't forget, okay, the same thing happened in 2022. And we had massive deflation, okay? Deflation, actual value decline at the end of 2022 and into the beginning of 2023. So remember that. But either way, don't forget, get local. So median asking price is doing the same thing. It did go down a week over week, which is from here to here. Okay, it's up actually a lot. I think we're seeing that gap, year over year gap of 6.1%, again, because the higher end of the median home is selling. Less of the lower end of the median is selling. So the growth again is at the higher end, which again manipulates median. We all know that by now, but regardless, the trajectory is going up. I don't trust the data. It's lagging data, but the data, it's going up year over year, week over week. It's gone down. Now it has been going down, or basically, staying plateaued since about right here, guys. So it's been about plateaued, I'd say, for about 2 months, which again, it doesn't make sense that median sales price is skyrocketing. Something seems off with this data, but maybe I'm wearing a tinfoil hat. Comment below. Let me know what you think as a community of real estate mindset. Do you guys trust this data? Okay, so here's a huge one right here. Here's home buying housing payments. Now, again, the bulls have flipped on this. They're no longer saying that this matters. I'm saying that this matters. They say it doesn't matter, and they're saying it doesn't matter because they're saying income growth, real income growth doesn't matter. The thing is, guys, is what you're looking at here is why things the way they are is not sustainable. If things happened the way they did happen over a course of 10 years, where we all had the opportunity for incomes to grow at the same pace as unaffordability, maybe, but that didn't happen. And so this gap right there is breaking down. We see it in defaults. We see it in transactions. We see it in buyer's remorse surveys. We see it in inventory growth outpacing buying demand. Housing payments are absolutely disgusting. And again, it's saying 6.5% year over year, but do not forget where we came from. Do not forget 2021 is not sustainable. Either interest rates have to go into the 3%, which likely will not happen, or income has to shoot up about 60%, or prices of houses go down. That's not something that we have to guess on. We have multiple times in history where prices went down of houses. What you have to ask yourself is, do you think prices are going to go down in your market? Odds are yes, because income, again, I keep going back, income growth. And we haven't even gone into a technical recession. I know we've been in depression since 2012 or whatever, right? I get it. I get all these things. But we haven't even gone into a spiraling depression or even have unhinged unemployment, at least not like it's going to get. Comment below whether or not you agree with that statement. Comment below. Do you agree? Do you not agree? Or is everything fine? Some people think the economy is great. I'm always like, well, then what's up with the deficit spending, guys? I mean, come on, you guys are, look at the geniuses in the comment section. To all the geniuses in the comment section, what's up with the deficit spending? Okay, if the economy is so great, what's up with the deficit spending, guys? Seriously. And then what about the yield curve inversion? What's up with that? We're just going to ignore the most trusted set of data? You can, but I'm not. All right, we got pending sales down 5% year over year. So another indicator that demand's in the gutter. And once again, you guys, 4-year low. So don't get caught up in the headlines. People don't want to buy a house. And most of the people that are purchasing right now regret it. Don't let them bully you into purchasing. Okay, again, don't let them bully you into purchasing. Now, I like this set of data, guys. This is new listings of homes. Now, this is great news, right? Up 10% year over year. Well, not exactly. And the reason why it's not exactly great news, because last year we were historically low. So being, 10% above historically low is still low. And the reason why I'm pointing this out is I'm explaining The golden handcuff effect, it's still there. If the golden handcuff effect was, eroding a bit, we would see new listings go up at a faster pace, which would be up here, where 2022 and 2021 are. So make no mistake, don't get lost in that narrative where, oh, the golden handcuff effect is starting to unravel. No, it's not. If interest rates were to go down 200 basis points tomorrow because of unemployment, right? Because of unemployment, we're going to have a surge of inventory hit the market that demand cannot absorb, even if rates go down 150 basis points. Demand will not be able to absorb it. The golden handcuff effect is still in effect. We see that in new listing data. And this is another indicator that demand is absolutely shot in the housing market. Active listings is up 18% year over year. This is a 4-year high. Again, this is showing demand is good. Now, this is great news. Again, we're ahead of 2022 when we're right here. So we're ahead of schedule. And remember, you guys, in 2022, we had year-over-year decline February of 2023. So I think we're going to hit nominal decline this year. To me, the data is there. You got to kind of look through all the drama, look through all the emotional ranting in the comment section, really look at this data. You guys, we have a 4-year high of active listings. This is great. And again, a 4-year high of active listings with the golden handcuff effect still there, still strong as can be. It's still there. And yet we still have a 4-year high. This is great news. Also, some beautiful news, guys. 3.3 months of supply available on the market. Now, I don't want to get lost and say that we need 6 months of supply for it to be a buyer's market. That's actually not true, because remember, in 2017, we had 3.7 months of supply nationwide. So we are very similar. We're not there yet, but we are very similar to the inventory we had in 2017. I talk about 2017 because it's 2 years before lockdowns. If we look at 2019, still 3.7 months. So again, we are close, very close to where we were at in 2017 and pre-lockdowns. This is great. 4-year high right now, 3.3 months. Beautiful thing. So we have 42% of pending sales under contract within 2 weeks. There's still people buying, but I do want to say, again, point out that demand is in the gutter. This is a 4-year low. And when I say 4-year low or 4-year high, what I'm saying is for this period of time, because remember, we enter cycles of seasonality. So it's important to understand when we're on this roller coaster ride, what happens during that season. Okay, 32% of homes sold above final list price. So again, the market's divided, higher end doing well, sometimes even lower end. But regardless, you guys, even though 32% of homes sold above final list price, that's a 4-year low for this time of year. So again, 4-year low. So we've made a lot of progress. And again, another indicator that demand is even worse. It is even worse. So demand is even worse, and unaffordability is even worse. And now we have proof. We have surveys from buyers, and there's still people just sending it without any regard or care for risk. They're just buying. It's crazy. Take a look at this. This is a beautiful set of data. And this, again, this is a leading indicator. Okay. Leading indicator. Watch this. Very important. There's a lot of noise, a lot of data, but here is one of our leading indicators. And this is absolutely historic. This is a new record. We've never had, for again, 4-week rolling average, we've never had 6.9%. So at the same time, oh, historical high, right? Foolish optimism, go buy a house. Well, at that same time, people can't sell. Look at the price cuts. 6.9%. You got to be cautious going out there, okay? Buy a house that needs new carpet, or just be patient. My point is, things are changing and price cuts are absolutely surging to the point where it's absolutely historical. This is a leading indicator. This is great, just like days on market and active inventory. This is great news, guys. Keep your eyes on price cuts. It is absolutely out of control. It is in the data. Okay, average homes sold for 99.7% of final list price. This is another indicator that demand is in the gutter. This is another 4-year low. Okay, 4-year low for this time of year. We are whacking seasonality. I'm sorry, guys, okay? To all the haters again, I'm sorry. The housing market's not resilient. It's not great. If it was, we wouldn't have sales that were worse than the 1970s. We would have all metro areas absolutely skyrocketing. And can you explain Austin, San Antonio, Fort Worth, Wilmington, Birmingham, Myrtle Beach, Idaho, Surprise, Arizona? Wait, these are going to be hot spots of foreclosure and price decline, especially in clusters of new home construction. Now, you can choose not to believe me, that's fine. But again, I want to continue to encourage you, go outside and walk these locations. Last data visualization set, which is good because I'm getting tired. Home buying demand, okay? In the gutter. It's in the data. No emotion here, okay? We're using their own backwards looking data. Demand is going down. It's a 4-year low. There is no question about it. You guys, I'm going to be honest with you. Okay, here's the thing. I wanted to be able to answer a question on where do you go to get the data and how do you talk to a realtor to get the data. Now, if you're a consumer and you want to track your local housing market, just ask a realtor specifically to generate comparable sales for 2023, 2022, and 2021 with a 500 square foot variance in the subdivisions where you want to purchase in. Okay, now what I do is I compare 2021 and 2020 to see whether or not I have wedge. So again, call up a realtor. Please give me the comps in this X subdivision. Give me comps, the average home. Give me comps for 2021, 2022, 2020, 2021, right? As far back as they're willing to go, and ask for the average square foot and size for those years. With that information, you guys can calculate wedge. You can calculate cash flow. I have a free form in my description. But you guys got to get local. And sometimes, guys, you got to get uncomfortable and you got to talk to a realtor. Okay. It doesn't mean you have to use them, but it allows you to also shop them and find the right one. A great realtor is so hard to come by, but they are worth their weight, dare I say, in gold. I'm just saying, again, it's rare. It's just most of them, it's just trash, okay? A good realtor is going to use data. They're going to be cautious. They're going to share with you genuine perspective. They're going to help you save your money. Let me know if you agree. But either way, you guys, if we're on the sideline, we should be working on our purchasing power, our credit, our income, and our assets, developing great relationships, and understanding life is not all about purchasing real estate, although purchasing real estate is a good thing generally. It's just right now, let's just be cautious. Let's enjoy where we're at right now. Hope you guys like the new studio. I got out of surgery. They removed some stuff. Everything went well, though. One more year good. I'm running out the gates strong. I plan on making a community, a school. We're going to train some people. We're going to help educate the U.S. We're going to turn weak consumers into strong consumers, and we're going to take over the housing market. We're going to make great decisions. I love you guys. Thank you for the growth. And if you're out there investing in real estate, you guys already know I wish you luck, and I hope you win.